Welcome back to the portfolio, everyone. Today we're going over the top 4 Vanguard ETFs you can buy right now. These Vanguard ETFs have low cost, great diversification, and can be part of anyone's portfolio. Vanguard makes a lot of low-cost ETFs that are great for passive investors who just want to contribute money to their portfolio each and every week or each and every month and passively let that money grow long into the future without having to actively manage their portfolio. Vanguard gives you so many different options for different ETFs that track different sectors or overall markets. You can even buy ETFs that own stocks and equities from every country in the world. Vanguard does such a good job. They're one of the largest asset management companies in the world with currently over $6.2 trillion of assets under management. Vanguard has continued to grow and they offer very nice innovative products that can really be used by any investor worldwide. So we're going to jump right into the first pick, but before we do that, I am the Gen Z investor, and every single day I come up with new videos that talk about different stocks you can buy, the overall stock market performance, as well as any big stock market news or headlines. So I please ask, can you like and subscribe? And we're going to jump into pick number 1. So the first pick is ticker symbol VGT, Vanguard's Information Technology ETF. So as you can tell from the name, this is a technology ETF. This ETF seeks the performance of the technology sector, which of course is on the boom right now. With technology, we live in a technology-driven society right now, and I only believe technology is going to grow into the future. So I really believe this ETF has a lot of upside potential and a lot of growth potential because of the holdings that it holds within it. I believe technology is going to drive our economy even more than it is right now, and I really believe that the new technology companies out there are going to grow in market cap, grow in size, grow in revenue, and this ETF is going to hold those companies and overall see that growth tied along with it. So current expense ratio on this ETF is extremely low at 0.10%. Very low expense ratio, very minimal. You're not going to really notice it overall when you look at your returns. If you take a look at performance for this, if you invested $10,000 into this fund 10 years ago, your money has grown to over $63,000 in 10 years. That is absolutely phenomenal. You have over 6x your money in less than 10 years, which is astounding. Some other things we want to take a look at here is what this ETF is actually invested in. So it's invested within the technology sector, but there are subsectors or industries within each technology sector. So you can see here it's nicely diversified through a bunch of different industries within the sector. You can see application software makes up around 13%, data processing and outsourced services around 15%. Of course, another big one, system software is around 21%, and semiconductors around 15%, then a bunch of other smaller weightings within some other subsectors. If we take a look at the largest holding, which make around 59% of total assets within the fund, you can see all the big boy tech companies. Some of the largest companies in the S&P, Apple, Microsoft, Visa, MasterCard, Intel, NVIDIA, Cisco, Adobe, PayPal, and Salesforce. All solid companies that I do believe all have a lot of potential to continue to grow moving forward. And I feel very comfortable adding this ETF to my portfolio because the largest holdings, which we're going to take up around 59% of my money, are all solid companies that I really do believe in long term. The next thing we're going to take a look at for this fund is how it's performed annually over the past 10, 15, 20 years. So you see here, the current price on the fund is $280 a share. If we take a look at how it's performed annually, you can see since 2004, a 12% annual return. That is spectacular since 2004. That is great to see. That includes, of course, the financial crisis of 2008 when we went through a recession, and it shows that fund, how it performed, including that dip. Over the past 10-year bull market, you can see the fund has returned 20% annually, which is absolutely remarkable to see. This fund, I believe, is going to continue to grow long into the future. The second fund on our list from Vanguard is Vanguard's High Dividend Yield ETF, ticker symbol VYM. So of course, this tracks the performance of the Vanguard High Dividend Index. So it invests in large cap companies that pay nice dividends. Very, very, very low payout ratio at 0.06%. Once again, very minimal, not too worried about that. If we take a look at how much your money has grown, $10,000 in this fund 10 years ago, has grown to over $30,000 in 10 years. So you've 3x'd your money within a matter of 10 years. And of course, you could see that your money was actually around $35,000 pre-pandemic. And of course, now it has not fully recovered yet. So you're still seeing it over $30,000 if you invested into this fund 10 years ago. Taking a look at what this fund holds, another diversified, nicely fund. So some of the largest sectors, healthcare, financials, consumer goods. And if you take a look at other smaller holdings within this, you can see industrials, oil and gas, telecommunications make up smaller weights, but a very nicely diversified ETF overall. Total number of stocks within the ETF is 393. If we take a look at the top 10 holdings, which make up only around 27% of total assets, you can see some of the safest, strongest dividend-paying companies on the market right now. Johnson & Johnson, JP Morgan Chase, Procter & Gamble, Intel, Verizon, AT&T, Pfizer, Merrick, Cisco, and ExxonMobil, all extremely strong dividend-paying companies, and a lot of these companies here I do believe are going to maintain their dividend and continue to grow it year over year. With regard to annualized performance, you can see here that VYM has grown at 7% annually since inception, and over the past 10 years, they've grown at a rate of 12% per year. So if you're looking for that nice dividend income coming into your portfolio, holding this ETF of nice dividend payers at around a 12% annual return over the last bull market and around a 7% annual return overall is very nice to hold within your portfolio and can be nice for any dividend investors around the world. The third Vanguard ETF we're going to talk about today is ticker symbol VDC, Vanguard's Consumer Staples ETF. So once again, this is an ETF that tracks an individual sector of the market. And this is one sector of the market that I do believe is going to grow moving forward, similar technology. It may not grow at the same astounding rate as technology will, but I believe this is an ETF that's going to continue to grow because as a consumer staple companies, these are companies that we're going to continue to need, continue to have demand for long into the future. These are not cylindrical companies that come and go. These are the staples that we have day in and day out, and I believe they're going to continue to be staples continuing long into the future. Once again, very low expense ratio at 0.10%. And if we take a look at how it's performed, your $10,000 10 years ago is once again worth over $30,000 now. So you have 3x your money within the last 10 years. With regard to holdings, all within the Consumer Staples ETF, you can see once again diversified nicely into a bunch of different subsectors. Some of the largest are household products, soft drinks, packaged foods and meats, hypermarkets, and supercenters. And of the largest holdings, you can see 65% of your money is going within these top 10 holdings of Procter & Gamble, Coca-Cola, Pepsi, Walmart, Philip Morris, Costco, Mondelez, Altria, Colgate-Palmolive, and Kimberly-Clark. All solid companies, again, all companies that I do believe are going to continue to generate revenue long into the future. There's none of these companies here I believe are going to go bankrupt anytime soon. These are all solid companies. A lot of them do pay nice dividends, and I believe that dividend income will continue to grow long into the future. Once again, with regard to annualized performance, let's see how this ETF performed. You can see here since inception in 2004, once again, suffered through the 2008 financial crisis. You can see an over 9% annualized return, which is beautiful. On the 10-year return of close to 12% annualized. Once again, very nice returns for your portfolio, especially because with these ETFs, you don't really have to manage them. You just continue to fund them each and every month or each and every week and let your money grow extremely passively without worry. The fourth and final ETF we're going to talk about today, it does not hold equities. It is actually a bond ETF. So this is Vanguard's Total Bond ETF, ticker symbol BND. So of course, this does perform a lot less than equities just by the nature, but once again, this is a much safer conservative ETF. And I do believe for a lot of people holding a small percentage of bonds if you are young may be unnecessary, but of course, people who do like that security and that nice safety to kind of like manage overall risk of their portfolio and have strong asset allocation, then bonds are great. And I believe for personally, bond ETFs do a great job of diversifying into the bond sector at an extremely, extremely low cost. This ETF's expense ratio is at 0.035%. Once again, almost unnoticeable. It's so minimal that you barely even notice it coming off your returns. And for a bond ETF that you're trying to use to basically preserve capital, keep your capital growing and match inflation, then this is the type of performance you want to see, extremely with a nice low fee. So of course, this is a ranked with 2 on the less reward, less risk side, of course, because it is a bond ETF and it is extremely low risk. If we do take a look 10 years ago, $10,000 invested into this portfolio would now have around $10,448. So once again, you still saw a nice overall return from your bond portfolio allocation within your portfolio. And how this ETF is diversified, as you see, 60% of your money is going to US government bonds, a small percentage AAA, AA, and of course, they have a decent sized chunk into BAA bonds. Total net assets for this fund are $269 billion. And of course, the average effective maturity is around 8.3 years and average duration around 6.4 years. If we take a look at how this ETF has performed, you can take a look and see it's performed since inception in 2007, around a 4.5% per year growth, which in my personal opinion is phenomenal. Those are some nice growth from a bond ETF That's really everything you want to see. You hold bonds to try to preserve your money, maybe make a very small minimal return. And if inflation grows at 2 to 3%, holding your bonds in this portfolio that holds around 4.5% average annual growth just shows that your money is actually making you a small 1 to 2% on top of inflation each and every year, especially when you're using that to just have a minimize risk in your portfolio, preserve capital for the long term. 10-year performance is around close to 4% per year average annual, which is again great to see. So those are the top 4 Vanguard ETFs I'm going to add to my portfolio right now. If you like the picks, please leave them down in the comments and let me know what you thought. If not, that's okay, but please like and subscribe. And I'm the Gen Z Investor, and I will see you in tomorrow's video.